east of Harlem. Doug's gonna be there. You got to call him.
Hello, everybody. It's John Klotz, your host of Money Talks Media. Welcome to our bi-weekly segment dedicated to growing your money in and around the GTA. We have a serious roster of speakers, including money managers, stockbrokers, stock pickers, hedge fund gurus, CRA experts, tax experts, accountants, lawyers, you name it. We've done it on this show. And by the way, everybody, happy Valentine's Day. We have a few Valentine's experts coming on as well. Money Talks Media is proudly based on the public speaking series Toronto Talks, now in its 9th year as a public speaking venue. And we encourage you to come out to our events. You can check those out at torontotalks.org. We've got a very serious event coming up at the end of March with Jury Trubasky, and it's called The Art of Making Rain. If you're self-employed and you're out there trying to grow your business, you have to come out and hear Jury Trubasky talk about how to line up your next client, the art of making rain. And that is at torontotalks.org. If you're listening to this show, of course, you can request you come for free of charge. Typically, we charge $20 for admission. And all we ask is you drop a loonie or toonie in the bin for a charitable cause, which is Camp Uchagayas, a camp for children with cancer. Money Talks Media is proudly sponsored by Northwood Mortgage Life and Partners in Planning Financial Services. Let us show you how we can take years off the life of your mortgage. And let us show you how you can create an effective retirement plan for yourself. Request our newsletter. Go to northwoodmortgagelife.com and just subscribe there. And we will send you our newsletter and our tax tip and our tax secrets. And that's all at northwoodmortgagelife.com. As well, if you missed one of our series, you can check our prior events at moneytalksmedia.com. That's moneytalksmedia.com. And of course, if you have any questions, please feel free to call us at the office at 416-969-8130 and ask for extension 230. And now, on with the show. Today's Valentine's show features our very good friend, Mr. Brad Hughes of Excel Funds, who's going to be talking emerging markets. Welcome back, Brad.
Thank you very much for having me. A pleasure to be here, and happy Valentine's Day to everybody.
Absolutely. Here, we even have a little Valentine's candy for you, and any listeners, of course. Brad, you've been on the show a couple of times. We very interested in talking about emerging markets. Go ahead. What's your view on the economy out there? Maybe we can talk a little bit about what's going on in the world, Egypt, that sort of stuff.
Yeah, a lot of activity going on out there. It's been a very scary spot, I guess, to start the year. Here we are about 6 weeks in. And the emerging markets, some of the developing markets have been a little bit volatile. Places like India have dropped dramatically in the last 6 weeks.
How dramatic?
It was down about 15%. However, they had a huge rally today of about 446 points, and
wow.
So yeah.
See, 15%. I know, anyone who's experienced 2008 with the TXX going down 42%. It's manageable considering what's going on there, and everyone appreciates there's going to be volatility in that sector.
It is, and I think part of the problem is Egypt. That just clouded a little bit of the investors' minds and concern what can happen in some of these other regions. And then you have the U.S. coming in with much better than expected earnings in a lot of places, a lot of companies, about 80% or more.
Well, it's funny because we've had a number of different fund managers on here, and they're talking the U.S. And I know we're here to talk about emerging markets, but they're saying the market conditions for investing in the U.S. have improved dramatically. And we're seeing some decent rates of returns from companies we all know and have heard of, which is, of course, the whole problem with the emerging markets. No one's heard of any of these companies. Carry on, though.
I'm willing to invest in, RBC because I've seen the bank on every street corner, so I know it. ICICI Bank, probably growing at a much faster clip, but never heard of it. Why would I buy it?
Right.
State Bank of India, whatnot. The U.S. has had a little bit of a boost, and that's one of the unique things. The S&P has sort of moved up, and it's not dragging the emerging markets with it right now. And we always look at the past. Very important. Investors look at it and go,
That's all they look at.
if I would have invested my money here today, this is what I would have made. Now, at the end of 2010, the Indian market was very attractive. Strong earnings growth, the corporations are growing, the GDP growth has been strong, 9% roughly in that ballpark. Valuations were about 17 PE, so the expense of the market was 17, about the same as Canada, but with far less GDP growth, economic development.
Yeah.
And now all of a sudden, after the first 6 weeks, we're probably down in the neighborhood of 15 PE, in some cases 14, which makes it extremely attractive. From our perspective, I think we see the next couple of months being volatile, but we sort of seen the market bottom out, we believe. Place like India, we're going to see a few days where it's going to be up and down sharply, and the next 3 to 4 months that should level out. Inflation concerns can be addressed, rate hikes addressed, and now all of a sudden, throughout the end of the year, we expect the market then to start trending upwards with a lot less volatility.
Now, why is it? Okay, so let's talk about that, because it's RSP season, and all our clients are going, where should I put my money? Everyone, as you know, has sort of forgotten the 2008 market meltdown, and all they're seeing is growth in their North American equities. What's the case for emerging markets, and why should someone continue to invest there, and what are some of the strengths and weaknesses of those markets? Go ahead.
Yeah, I mean, it's the 14th of February. Investors, not that they procrastinate, but probably, on February 28th, March 1st, they're all going to rush out to see you.
They're all trying to secretly kill me by coming in the last 2 weeks. Yeah.
But we look at this, it's very fortuitous for the investors today.
Yeah.
The emerging markets have declined. This is when a lot of investors in Canada put their money in. It is a tremendous entry point to make a lot of money going forward. I think that investors have been very fortunate living in Canada. They've seen excellent returns on their portfolios, the stocks, whether it's your Canadian micro cap, large cap, commodity resources type of scenario. And that's very good. But we also have to look at what is driving those stories, and a lot of that is coming from the emerging market developments.
They're using our resources and oil and gas and rocks and trees to fund the growth they're going through.
To develop all the power and the roadways and things that they need, and that's very important. Now, you could make the case that, well, if I have Canadian resources, I have emerging market exposure.
Yes, with less volatility. That's the
Well,
argument I've heard.
It is. Now, if we look at the overall market, if we look at the MSCI World, if we look at Canada, EFI, and the MSCI emerging markets over the last 5 years, and using one measurement of volatility, of risk, we use standard deviation. The last 5 years, the world, MSCI World, and EFI have been riskier than investing in emerging markets.
Right.
Canada has been less risky. But that said, 2008, some of the banks were dropping in excess of 50%, and those are the safe investments.
No, I know.
But so over
Preaching to the converted.
So over the last 5 years, we measured this level of risk volatility. So the emerging markets were second behind Canada. Now, if we look at the returns, those same markets, the same time period, what you find is the emerging markets returned 57% versus about 35% in the Canadian marketplace, and basically flat or negative in the MSCI World or the EFI indices. So it's definitely a huge opportunity that an investor should be looking at.
Interesting. There was an article in, and I was just perusing it in the Economic Review, talking about the whole situation in Egypt with their the whole change of government there, that this has created some excellent opportunities for investors to take advantage of, because that is an emerging market.
It is. Actually, our portfolio manager on the emerging markets fund, who was supposed to be here until he fell down and broke his knee.
Yes.
He has talked quite a bit about Egypt, and if he hasn't already, he is definitely making inroads to getting some positions in there because they feel that the recovery will be quite strong, and the country was beaten down unnecessarily. We look at Egypt, and although there's no direct impact on emerging markets, on India, we feel that there was a connection between some of the downside and the other markets. The perception that outside of North America, there's this extra risk that's been added. What's going to happen in some of the other countries around that region, or some of the other ethnicities who might want to follow the same pattern. What can we expect? We're hoping that now, not at Excel, but I think everywhere, that with Egypt now sort of getting under control, hopefully elections soon, that's going to smooth out a lot of the perceptions on the global marketplace.
Okay, now when people talk emerging markets, they, I think, are talking basically China, India, Brazil, and Russia. It's only recently that, and at least in my experience, that they've been looking at things like Egypt, which I found kind of interesting because I don't see that in a lot of your portfolios, that they've been there. So maybe we could talk about what is the real emerging markets that people are most focused on, and maybe where are the opportunities there.
I think that 2001 Goldman Sachs had come out with the BRIC terminology, and some of the companies launched the BRIC fund, 5-6 years ago. And, that has really taken off, and I think it was marketed well to investors. And that's your Brazil, Russia, India, and China. But I think what we're seeing is a lot of attention is being put on what they call the N11, the next 11. Smaller regions that are benefiting and following the same pattern as India and China. So we're seeing perhaps a little bit of a renaissance with the focus on the broad emerging market funds, where companies like Excel can go into Egypt. Now we can add a position into Thailand, which didn't fall under our India mandate or our China mandate.
Okay.
We're seeing a lot of opportunities out there, and you can pick some very, very successful stocks in those markets.
Okay, we're going to take a quick break. We're going to come back. I'm going to talk about the hot spots. China, India, Brazil, Russia, the BRIC countries. We'll be back, Money Talks Media, with Brad Hughes.